Okay, miss.
So we are doing May-June 2023, paper 21, question number 5. And this sum is of limited companies. You with me?
Yes, miss.
Can you read the question, please, for me?
Yeah. Q Limited prepares its financial statement to 31st March each year.
Okay,
The
stop.
company,
Before we
yeah.
go and read the entire question, what is the thing that we have to go and see first?
Is it like we know the opening dates, right?
No, we have
Like
to first see what is it that they want from us. So when we do the markings, we can just focus on the things that they want from us.
or
Okay, so they want from us the retained earnings section, and they want from us the statement of financial position. Are you with me?
yes.
Okay. Before I go to the retained earnings section, just tell me what do you remember of your statement of changes in equity?
Yeah, yeah. For statement of changes in equity, I remember that if you want to transfer some funds to the retained earnings
So what are the
part,
columns we had? We had our share capital, general reserves, retained earnings, and total. Yeah.
yeah,
Okay. Then we have balance at start, which is recorded everywhere. If there is any profits, it is added to the retained earnings and total.
yes,
If there is any transfer to general reserves, it is removed from retained earnings and added to general reserves.
yes.
Statement of changes in equity records dividend on what basis?
On paid basis.
On paid basis, and dividend is always paid from the retained earnings.
Yeah,
So if they want us to have the retained earnings, I should know my balance at the start. I should know my profits, what I have transferred, what dividend I have paid, so I can get the balance at the end.
yeah,
Are you with me?
yes,
Okay, fine. Now I know I have to find the retained earnings on the last date. Yeah.
yeah, yes,
Also, I have to have a statement of financial position.
yes.
Keeping this thing in mind, I will read the question. Please read.
Yeah, the company's retained earnings at
Yes, yes.
1st
Read
April.
the question. Read the question.
Okay, calculate the retained earnings of Q
Darling,
Limited at
asking
31st.
question.
Yeah,
Q
that's what I'm.
prepares its financial statement of 31st March. Can you start from here?
Yes, okay. Q Limited prepares its financial statements to 31st March each year. The company's retained earnings at 1st April 2022 was $16,250.
Okay, stop. What does this mean?
The opening retained earning balance was 16,250.
This is your opening retained earnings. Okay, go ahead.
Yeah. During the year ended 31st March 2023, the company made a profit of $43,500 after charging all expenses and interest. So
Okay,
this is the profit for the year.
profit for the year. Where does this go?
We'll add this to the retained earnings.
Okay, then
Dividends of $39,000 for the year were paid by 31st March 2023.
hmm.
So we subtract this from the retained earnings.
Okay. So can I just use this information and fill my retained earnings section?
Yes.
Start. How will I write?
16,250,
I
opening
will
retained
write
earnings.
retained earnings at the start.
Yeah.
So retained earnings at 1st April is 16,250. Add what? Profits.
Add profit for the year.
43,500. Deduct what?
Dividends.
There could be any transfer to general reserve. So before I do not have any information about it, I'm not doing anything else. Okay.
Yeah.
What do I
What,
do?
Miss?
There could be any transfer to general reserves. These are the only things that comes, right?
Yeah, but they didn't mention anything about it.
Yeah, so I have not read the full question also, right?
Yeah.
So after reading the question only I can make a conclusion.
Okay.
The idea is that you should know what comes.
Yeah.
Come on, read the question ahead.
Yeah. The following balances were extracted from the company's ledger accounts after the income statement had been prepared.
Okay.
So fittings and equipment and at cost, then provision for depreciation of
Where does
fittings and
this come?
equipment. This will be depreciation.
Darling, I am marking for the statement of financial position.
Okay, so this will be liability.
Hmm? Is
Liability.
here? Will this be
Oh,
NCA?
yes.
And this will be NCA second column?
Yeah. Okay.
Yeah.
Yes.
Motor vehicles at cost. Where will this go?
NCA.
Okay. This,
Uh, pro- Provision for depreciation will be NCA as well.
which column?
Second column.
Then this,
Inventory is current assets.
then,
Balance at bank current assets.
then,
Trade receivable current assets.
hmm,
Provision for doubtful debts.
hmm.
This will be current assets as well.
Okay. From the trade receivable, you subtract new bad debts and new provisions. Okay.
Yes.
Okay. Go ahead.
Mhm. Trade payables is current liability.
Hmm,
Debentures, non-current liability.
hmm.
Bank loan, non-current liability. And ordinary share capital, it comes in the SOCE.
SOCE. So there is
Yeah.
no transfer to general reserves. Am I correct?
Yes.
Okay. There is no transfer to general reserves. So I know my total of the retained earnings. What is it?
Total of the retained earnings. Yeah.
Hmm.
1 second.
So my total of the retained earnings would be 20,750. Are you with me?
Yeah.
Okay, fine.
Yeah. Miss.
So we have done all the markings that is needed for our statement of financial position. Yes,
Yeah.
Mahak?
Yes. Yes,
Okay.
miss.
Now we just have to put it. So I am just relating it to the marking scheme. Okay.
All right. All
So
right.
how does the statement of financial position look? It has the non-current assets, it has the current
Yeah.
assets, then it will give you your total assets. Are you with me?
Yes.
Then you have your equity and liability section, which is nothing but your capital and reserves.
All right.
For capital of reserves, you will have your share capital, you will have retained earnings and general reserves.
Yeah.
No information about general reserves is given, so this will go.
Miss, what? Could you repeat that once again?
In your capital and reserves section, you have your share capital, you will have your retained earnings, and you will have general reserves.
Okay.
No information about general reserves is given, so we will not record it.
Okay.
Okay. Then you will have your non-current liabilities and then current liabilities. Are you with me?
Yes.
So you have assets, non-current assets and current assets, total assets. Then you have equity and liabilities, non-current liabilities and current liabilities.
Yeah.
Are you with me?
Yes, miss.
Now we just relate. Come on. Fixtures and fittings, non-current assets. Cost.
Yeah. 150K.
Yeah. Provision for depreciation, second column.
Second column. Yeah.
Net book value, how do you get it?
Cost minus PDD.
Yes, correct. I'll go ahead. Motor vehicles, cost.
Yeah. 72,000.
Second column.
Yeah.
Cost minus PDD net book value. Correct?
Yes, miss.
Then you make your line throughout, and this line you stop over here.
Okay.
Yes?
Yes.
Now current assets. You have three, four things that you've marked as current assets.
Yeah.
Inventory, we'll do it in the order, right? Stock, debtors, cash, bank, other receivables.
Yeah. Okay.
So inventory first, trade receivables minus bad debts, and then your bank balance. This is debit, so it is current assets. Are you with me?
Yeah. Yes.
Then you get your total current assets. All this I normally do it over here, okay?
Miss, if bank has a credit balance then?
Then it will become bank overdraft.
Okay.
I do all these calculations over here. So on this column, I just want the total assets, the non-current assets and current assets, which will give you your total assets. Are you with me?
Yes, miss.
Okay. Then we go to our equity and liability section. With me,
Yes.
ordinary share capital
Yeah,
and
120.
things that we found out. So the total is 147.50. I don't do this over here, I do it over here.
Okay.
So just the main things outside. Then you have your non-current liability.
Yeah.
Yeah,
Yes.
sure.
Yes. Yes. Current liabilities.
And then you have your current liabilities, that is your trade payables.
Yeah.
So equity and liability, non-current liabilities and current liabilities will give you your total equity and liabilities.
Yeah. Yeah.
Your total assets should be equal to your total liabilities.
Yes.
And this is how you make your SOFP. So just complete your SOFP, I'll wait for you.
Okay, miss.
So in the next part of the question, that is 5C, we are asked to calculate the asset test ratio. Can you tell me the formula for the liquid ratio or the asset test ratio?
Yeah. Current assets minus inventory divided by current liabilities.
Okay, so the formula for liquid or asset test ratio is current assets minus the inventory upon the current liability. What is your total current assets?
Total current assets is, miss, do we? Oh
71,75.
yeah. 22200.
Your inventory is 51,790.
Yeah. Yeah.
To divide it by your current liabilities, that is 31,450.
Yeah.
Okay,
Okay.
so it's coming to how much?
It is 0.641.
0.64.
64.
So we are done with the liquid ratio 0.64 is to 1. Writing this is important. Do not forget that.
Yeah. Okay.
Okay, come on.
Yes.
Can you read the part ahead?
Yes. The directors, who are also the shareholders, would like to expand the company and wish to borrow $50,000 to fund the expansion. They're considering whether to issue further ordinary shares or to request another long-term bank loan.
Okay, so they want to expand the company and they were thinking whether they should expand the company with own funds or loan funds.
Yeah,
Okay, they are thinking whether they should use their own funds or they should borrow the money from outsiders.
yeah.
Read the D1, what do they want?
Suggest two reasons why, although the company has made a profit, there's still little cash available in the bank account to fund the expansion. So, miss, one reason could be because they sell goods on credit,
Okay,
and the other one could be because the gross profit margin is low, or the profit margin is
they're
low.
saying that they have made profit.
Oh, okay.
So they have made profits, they do not have too much of cash. Why?
It could be because they have a lot of trade payables, right?
So they are selling goods on credit, so and they are receiving money later. That is
Yeah,
why they do not have a lot of cash. They want to know that even though profits are happening, why is there so little cash? So
yeah,
they're selling on credit, they are making profits, but they're receiving the money later. So that is why there is little cash. Other reasons is because they are paying dividends. Since they are paying dividend, very little cash is available. Are you with me?
or yes, yes.
Come on, read the next part.
Advise the directors whether they should fund the expansion by issuing ordinary shares or requesting a bank loan. Justify your answer.
So whether you should issue ordinary shares or you should take bank loan. Two options.
Okay,
So
so we
you
just write the advantages of both.
shares
Both.
or take bank loan. So you have to give pros and cons of this, and you have to give pros and cons of this.
Yeah. Okay. Um. So for issuing ordinary shares, the advantages could include it is a permanent source of capital,
Okay.
and cons could include would have to pay dividends.
Dividend is paid only if there is profit, right? So dividend
Yeah.
is paid only on profits.
But didn't they say they made a profit?
You want to expand the company. To
Okay, so
either have own funds or loan funds.
we could write uh ownership may change.
Okay. So it is a permanent source of capital. Dividend is paid only on profits. However, ownership can change.
Yeah,
It can dilute ownership. It's better words.
yeah.
What will happen if you take bank loan?
Bank loan, uh bank loan has to be repaid with high interest rates. Uh
Has to be
uh
repaid. Interest has to be paid.
yeah. But it will be easier for them to obtain it
Bank loan is easy to obtain.
since they're a limited company, right? It's easier.
Security will be needed.
Yes, but don't we have to just write one
Already
advantage?
two loans as I have seen over here. So will the bank further give you any loan?
Oh, okay. So no, we have to pay our old loan
So very.
before we get them.
So what do the company should do to expand the company? So you have to
They
give
should
advice, and advice will be for 1 month.
issue ordinary shares as it is a permanent source of capital and you don't have to repay it back.
Hmm. Okay, that's it. So with this, we complete our October, November
No, May, June.
June 23, paper 21, question number 5, right?
Yes.
Okay, so it just had the retained earnings sections, the statement of financial position, and the theory. Okay.
Yes.
Okay, fine.